Real estate stocks are set for a record run in 2024. REITs historically outperform typical stocks after a Federal Reserve tightening cycle ends. Realty Income, the monthly dividend company, seems to be increasing its risk profile, which could propel it into new growth stages. Healthpeak Properties, a wise strategic play in 2021, will continue paying dividends for decades as America ages. CoStar Group, it's not an actual REIT, so this marketing company is largely immune to wider real estate conditions. Let's dive in. Here are the top 3 real estate stock picks for the new year. Welcome to Timely Investment Research. Like broad markets, real estate stocks had a turbulent year in 2023. The first half of the year saw substantial downward pressure in both commercial and residential sectors due to interest rate hikes. But the latter half offered renewed hope as physical real estate pricing and real estate investment trusts surged. The recent rally points to great possibilities for real estate stocks in 2024. Historically, REITs outperform wider market cycles after a Federal Reserve tightening period, with REITs averaging a 20.9% annualized gain 4 quarters after a quantitative tightening cycle ends. If rumors that the Fed is finished with rate hikes are true, REITs and real estate stocks could have their best year in decades. But don't let that enthusiasm cloud your judgment. Standard due diligence rules still apply, especially as remote work trends and high mortgage rates continue pressuring certain real estate sectors. For investors wondering what the best real estate stocks for 2024 might be, here are 3 top picks. Number 1. Realty Income. It's hard to cover top real estate stocks for 2024 or real estate stocks in general without mentioning Realty Income. The stock suffered in 2023, dropping almost 10% and trading at just 1.32x book value. But that is what makes this real estate stock a steal for income investors, especially if you add it to a retirement portfolio to appreciate over the long run. Beating this real estate stock's durability and longevity is tough. However, some bearish headwinds are putting pressure on Realty Income beyond basic economic concerns and higher interest rates. Most of the stock suppression came on the heels of Realty Income's announced Spirit Realty Capital acquisition due to close in 2024's first quarter. While expanding through acquisition points to financial strength and seems like great news, there are inherent downsides. Beyond overvaluation and dilution, the deal reveals an important point for shareholders. The merger will make Realty Income the 4th largest REIT and 150th largest S&P 500 member by enterprise value. Paradoxically, this cuts into Realty Income's growth potential, as smaller deals won't be worth the time invested. This ceiling forces management to expand into riskier territory that counters its core value proposition of low-risk, high-demand leasing. Namely, Realty Income is breaking into gambling and similar high-risk sectors. Whether this was a one-time deal or a full pivot into discretionary diversification isn't yet clear. Still, at today's valuation and a respectable 5.33% forward yield, it's tough to beat this real estate stock in 2024. Number 2. Healthpeak Properties. Healthcare is one of the safest sectors to invest in long-term, and Healthpeak Properties is one of a handful of real estate stocks within the industry that remain undervalued while offering a high dividend yield. The most popular healthcare real estate stocks usually focus on care facilities and hospitals. In contrast, Healthpeak Properties' portfolio focuses on medical office space and life science assets, although it holds some skilled nursing, housing, and hospital properties. Today, Healthpeak Properties offers investors a 6.01% forward yield, beating high-performing short-term treasuries. Healthpeak Properties' strategic path forward is unique compared to other healthcare real estate stocks, making it an important diversification tool. Amid the pandemic, Healthpeak Properties ditched most of its senior housing portfolio to focus on higher-end life sciences and, critically, private pay providers. Though America's population is aging and senior care facilities will be important, divesting itself from that sector reduces competitive risk while also avoiding cost-cutting legislative mandates that would cut into its bottom line. Instead, Healthpeak Properties focuses on those private pay facilities that will continue unabated even if national healthcare expansion eats into thin margins for other real estate stocks. With a solid strategy centered on a more targeted offering, Healthpeak Properties is another top choice for real estate stocks for 2024. Number 3. CoStar Group. CoStar Group isn't a REIT but stands out as an important real estate stock nonetheless. The company offers a suite of marketing services to commercial property and real estate players globally, making it one of just a few top real estate stocks not actively managing properties. The company boasts a deep wellspring of analytics and data-driven tools that service buyers and sellers alike, making the company a cornerstone within the market. This also helps make CoStar Group more bulletproof compared to other real estate stocks. Since the company's services tend to be market agnostic and less affected than directly invested real estate stocks, CoStar Group returned more than 12% this year despite turmoil in the larger real estate market. If market forecasts for 2024 hold true, CoStar Group might be the top real estate stock to buy. If nothing else, holding this stock alongside a handful of diversified REITs spreads out your risk more than a large concentration in riskier assets. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.